Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So as you know, yesterday Fed has taken the extra meeting where it cut the interest rate at once for 0.5%, so it was really not quite expected decision, and as you can see, reaction on the market stands corresponding. Also, the regular meeting that should happen on 18th of the March is also expected that rate will be cut more. And yesterday it was mostly emotional reaction, especially on the gold market. So on the forex market it was not as significant, at least on the euro currency. It has happened, but not as strong as in the gold market. So in general, the strong upside reaction on the gold, we could treat only as run in the safe haven assets, because in general, when the rate decreasing, as you can see from the crisis of the 2008, it suggests a drop of the inflation, which also makes the pressure on the gold. And from that standpoint, the massive rate cut is not really a very good sign for the gold market as well in the long term. But in the shorter term, it was mostly emotional reaction, as response of the market to the opinion of the Fed that everything becomes worse in the global economy, and that was the actually reaction on the gold market as well. So just run in the safe haven assets, because we can't explain this fast rally by just the dropping of the dollar value, because the dollar has not dropped too much. It was some reaction on the euro. The dollar has dropped a bit, but not as strong as we see reaction on the gold. It means that here is additional factor works on the gold. So in the short term, what we could expect. So in general, this pullback is normal, as we are waiting for it, because we're considering the head and shoulders here, but it has happened a bit differently, not quite as we have suggested. And here we need to keep an eye on a few moments. First of all, on the daily chart, market is not at overbought, and it has chances to proceed higher. In fact, here we have some kind of the morning star pattern with the huge candles with it. At the same time, for the gold market, it is crucial to confirm the upward continuation on the long-term trend. It has to move above the previous top and just continue upward action. That's a very important point. Until market stands below it, well, everything could happen. So the fast reaction could be over, and market just could continue downward action. This also could happen. And we need to find the points that we could keep an eye on to understand where market could follow. So on the 4-hour time frame chart, what we have? First of all, we have disrespected confidence resistance that on the background of the meeting, of the Fed meeting, has been broken, just with the fast action without any response. So market has disrespected it. Now market stands at the 618 resistance, 1461. This is 618 level. Our XOP also has not been reached. So market just has ignored it and shown this upward action. This is understandable currently. That's what we have right now on the table. If we'll take a look at this price action, you could see that here market could take the shape of the kind of the hand and shoulders, or even with no attention to the hand and shoulders, we have this large morning star, or which is the same as bullish engulfing, and suggests some retracement. Take a look at here we have support 1616, 1618 is confidence support, and we have uncompleted XOP target. Most probable suggestion is that market could try to hit the XOP, because market is not at overbought and takes currently just a short-term pause in upward action, and could show some spike to complete the XOP target, reaching kind of the neckline or something of that sort. Then retracement back down could happen somewhere to the 1618 area, which is also agrees with the idea to retest the broken confluence. So very often the market, with respect to confluence, it returns back in the opposite direction to it. That in turn could become some kind of the bottom of the right arm or something of that sort here on the hourly chart. And that also will be some kind of the vital point, the test for the gold market. If it will be able to hold here in this support cluster around 1618 area, then we could consider possible this larger A, B, C bottom, D patch in extension of this previous top and upward continuation. If market will fail to hold here and starts dropping, that will confirm that this reaction mostly was emotional, short-term reaction on the Fed statement, and market returns back to its own factors, just continuing downward action here with a greater downside A, B, C, top, D patch. So that all this stuff stands in relation to this support area. If it will hold, be prepared for upward continuation. If it will fail, market starts dropping lower. In this case, chance on the erasing of this rally will appear and market just will continue move down. So that being said, our trading plan first suggests the reaching of the XOP, then retracement somewhere to the 1618, where we will consider what will happen here. So potentially this will be an area for taking the long position with the upward continuation, based on the pattern that we have here, and also on the daily chart with this huge reaction. For the bears, if you have the bearish view and you consider taking the short position, it would be better to wait and see for the breakout of this level to the downside. In this case, that will be at least some confirmation that maybe market returns back to the previous action and just will confirm that this reaction mostly was emotional and has no significant background currently. So that's our view currently on the gold market.